But now everybody knows. Got to keep.
You don't have to be retired to receive tax-free income. The problem is the vehicles that we've been conditioned to believe to help get us there were never designed to produce income.
Got to keep going. What you want to be going, you will see. It's your destiny, be in harmony. We were never meant to be apart. What you want to be going, you will see. You can have everything you want. It's your destiny, be in harmony. Ooh.
If you had a machine in your garage and all you had to do was put a quarter in it and it printed out $100. Put a quarter in it, printed out $100. Would you ever stop that machine from running?
But now everybody knows.
So what if you use that job that you hate as leverage to fill your machine so they can create income for you, so you don't have to worry about income?
We know where the world is gonna go. But now everybody knows that you can't stop for too long. Got to keep going.
Hello, welcome back to you guys and to us, I guess. We are so happy that you are here with us tonight live. This is a great place to ask questions. If you do find yourself having questions, tonight we're going to talk about life insurance and whether or not you are using life insurance. You don't want to be using it the wrong way.
Right.
Did you know that about 53% of American households even utilize life insurance, whether it's a tool or just for the death benefit alone? 53%. Isn't that crazy?
And actually, that seems a bit high based off a lot of the conversations that I have, and I think a lot of the social media stuff that I see. I would think the number would even be less than that.
Yeah, I'm sorry. I messed up. It was 53%, 54%, about 54% of Americans have some form of life insurance. Yeah.
And I guess when you include the employer's plan, I guess that does make a little bit more sense.
Yeah. That's a lot of people who are not insured. And that's why we see a lot of things like GoFundMe's and things like that. But
Right.
again, a lot of people, just assume that that's what it's for. So we're going to bust some myths and we're going to talk about some misconceptions and some assumptions that are critical. And you want to avoid these mistakes and don't want to make these assumptions. So that's what we're going to talk about tonight. So jump in the chat. We want to know who you are, where you're tuning in from. We're excited. We've got some new things coming down the pipeline. We've got a new space we're creating, so we'll be in the same room and not just in the same house. We're excited for that too. Anywho,
Well, you blew right past that, because I don't know what people think, but there's been a fair amount of I'll call it new subscribers, new attendees to our lives, and I don't think people realize we are in the same house.
Oh,
We just happen to
right.
be in two different rooms. Like specifically, I'm actually in our bedroom, which sounds strange, but that absolutely is where I spend majority of my time. That's where my office sits, all that kind of good stuff when I'm working from home. And then your
Yeah.
office is in a separate part of the house. So there's an opportunity for us to be in the same space.
Yeah, when COVID hit, we had to make do, and we just stayed this way because it was like, if it ain't broke, don't fix it. And why do we care? But now we've now taken the time, we've gotten some help so that we can create a space that we can both be in. And we're really looking forward to that. Okay, so enough about us. This is about you. And you don't want to be using life insurance the wrong way. So we're over here talking about this because it's not just a snooze fest topic. It's a game-changing strategy and a powerful tool if you let it be. But if you're using it in the wrong way, can't let it be great. So you ready to jump in?
Yeah, let's do it.
All right. Oh, I hope it's loaded up.
Is it cute?
Here we go.
So this kind of also stems from a lot of the conversations I've been having around, I'll call it, hey, I know you guys talk about life insurance on your channel as well. And I have a life insurance policy. I don't know that I need what it is you're talking about, because I believe what I currently have will also do what it is you talk about. What you can do. I feel like my life insurance based product can also do the same. And that's not necessarily true. And so what we wanted to dig into is what I run across is a lot of individuals who, one, don't fully understand the product they have, nor understand the power of what I'll call it a properly structured cash value life insurance based product could actually do. So that's kind of what we want to dig into there.
Yeah, and a lot of these even come from questions and conversations that you have all the time with people
Right.
who just simply it hadn't been on their radar yet, and it should be. So if that's you and you hadn't considered it, this is a really important stream to tune into.
And also to note, this won't be a math ridden because we can go the math route as far as talking about life insurance, or we can go, I'll call it more of the substance and the baseline and the foundation of what life insurance is. And I'll say this will be more along those lines of understanding the basis, and we'll dig into the math later. All right.
Yeah.
So
For those of you who are bummed out about all that math you're missing out on, sorry about it.
right. So from a type of life insurance perspective, there's really only two types. There's term and there's permanent. So what do you have? Well, how would you know? Well, a couple ways to kind of figure it out is, hey, term is, I'll call it more along the lines of final expense. Hey, I'm buying this life insurance in case something happens to me. There really isn't no other value for having this life insurance. And maybe I got it with my job. And because I got it with my job, it's life insurance that I have as long as I'm working with that job. But the minute I leave that job, it's gone. And I think when people look at us and the strategies that we offer, they are shocked when I share with them, I have a term policy. I have what's called a convertible term policy. Why? It's in the name. The objective is to be able to convert this term policy into something more that I can leverage and or use. So there's term. And then there's also permanent, which is more of what we're going to discuss today. I'll call it based off these two vehicles, term versus permanent. In most cases, when you're talking about leveraging the cash value that you have or leveraging a life insurance based product to do other things, we're talking about a permanent life insurance policy. And there's not hundreds upon thousands of types of permanent life insurance either. There's a short list of items, and there's whole life, variable life, universal life, index universal life. Now there may be variations of those different types. There may be different structure you can apply to those different types, but in essence, we're talking about four types: universal, variable, index universal, and whole life. And let's just get to it. Today, we're going to talk a little bit more about how index universal and whole life policies, kind of the mixture in those two, universal and variable, I'll say are usually for more high income earners, those who have, this is um, I'll call it a finance based or financial advisor based product. So we're going to focus more on whole life and, and index universal. Did you have a question, sweetheart?
No, I just wanted to say welcome to everybody who's jumping in and to the chat and our self-directed fam. It feels like it's been forever. They're saying, yeah, feels
Where
like
you
it's been
been?
forever. Yeah, like where the heck? We've been so busy. So thank you for your patience too, by the way, everyone tuning in. We like missed you guys, and it feels good to be back. So thank you for the warm welcome in the chat. We really appreciate it.
Absolutely, absolutely. All right, so let me go back here, and I don't expect you to be able to read what I'm. Excuse me. I don't expect you to be able to read what I'm putting on the board at the moment. The main focus here is based off the types of different life insurance you might have. Let's see. Let me grab that. Is it based on whether the premiums are fixed or flexible? Which one is it? Death benefit, is it fixed? Or does it adjust as you contribute to it? Is it option A versus option B? Cash value, does what you have offer cash value or not? And that kind of helps you understand whether we're dealing with a permanent life insurance policy versus a term life insurance policy. Does it pay any dividends? And it's a yes or no question. Is there a dollar amount that is allowing your policy to grow faster or that you're able to leverage and use based off the growth inside the policy? And what is that growth? What is that interest rate that's growing inside the policy, and what does it consist of? And is it a lifetime of coverage, or is it a coverage while you have it? Is it a coverage while you work for the company that you have? And does it require medical exam? Meaning, in order to acquire this product, does it require you to have to get a medical exam, regardless of the type, and designed to produce income. And this is somewhat of a taboo statement because I think with all of the communication going on around life insurance on social media, there's a lot who say, hey, life insurance should not be used to create income. That's not necessarily true. Now, it shouldn't be used to, I'll call it, replace traditional retirement products. This is not a retirement plan, but can you generate or build enough cash value inside this product such that at some point when you're ready, it can produce income? And so the question is, where does your policy fit in this list? Is it a yes? Is it a no? Does it produce? Does it not? Is it term and is it permanent? What is it? And what it ultimately always goes back to, as it relates to us, is what's the goal? What's the purpose of having this product? Why did you buy this life insurance? Did you buy it in case something happens for you? Something happens to you, you don't want to make sure you leave your family with some burden that they can't handle. Or did you get it because someone told you you could be your own bank? Did you buy it for infinite banking? Like, why do you have this product?
Oh,
Is it? Go ahead.
oh, sorry. Go ahead. I thought you were moving on. Good. Carry on. Sorry. I'll add after.
No, is it being used for leverage? What do I mean? Are you looking for a vehicle that you can borrow against, use those funds, go invest or buy things or use as income? And then depending on when you do so, are you replacing that money that you use? Is this about supplemental income? Meaning in addition to everything else that you have, is this a vehicle that can also produce income for you? Do you understand what that even means? And if we are talking about generating income, how does that income get received? Is this a check that you'll receive every month? Are we talking about borrowing income from your policy? And if you're borrowing, doesn't that imply I have to pay it back? Like, there's so many things we have to go through. Did I get it for infinite banking? And we're not going to dig into the concept of infinite banking, but for those who understand the becoming your own bank or Nelson Nash University or whatever the case may be, why did you get this policy? Is it for this? Maybe it's for legacy. Maybe it's such that, you know what, I've got my retirement, I've got my current, I'll call it financial stability pretty much taken care of. But what about the generations after me? I want to make sure I leave something such that if as grandkids and great grandkids are born, they're placed in a position to where they don't have to deal with some of the challenges that I've dealt with. And then, is this an investment? And I think this is one of those terms where it receives a lot of negative, I'll call it, back and forth online because people see life insurance as an investment vehicle. I really don't. But these are more my opinions than versus what other people think. Meaning, is this an investment vehicle? Or are you using this as a tool to invest your money in to grow? Is it? And then the last piece is this a place to where I'm just parking my cash rather than put it in a cash value? I'm sorry, rather than put it in a um, what is it called? A savings, high yield savings account. Rather than put it into a high yield savings account, I'm just placing my money here because I know it will, one, be secure, and two, grow, I'll call it, better than a traditional savings. Sweetheart, what you got?
Yeah. If you show the list again, or anybody can just even rewind and pause on that list.
Mhm.
When you're asking what is the goal and is the goal, does it impact anybody beyond you? That's an important question. Most people don't even know what the different types of life insurance are, or that there are different types of life insurance. Right. And I don't have a percentage, but I'm sure it is a shocking amount of people who, when their loved one passes and they think, oh, they had life insurance. How do they track it down if no one's talked about it, right? If they're not organized. And then wouldn't you be shocked to learn that there wasn't actually any money in the life insurance policy when you went to go collect the life insurance policy or the death benefit because it had been eaten away? Some of these factors could be a very real thing where they think that they're leaving. The intention was to do something, but because they lacked some information and they made some of these mistakes, they ended up with nothing. And the people who are supposed to benefit the most from this type of policy ended up not even understanding why this happened, but the disappointment and the financial burden that this could place on somebody is also far too heavy. So that's it's good to understand what these are, even if it's not, some of these don't apply to you. It's probably applies somewhere up the chain, because these particular types of insurances were popular at different times based on who was talking about them, right? And when they came out. So I think that for especially anybody who's beyond a death benefit, it's important to at least be able to understand what's in your family, right? What's in your machine, in your family bank.
Absolutely. So if we are acknowledging that life insurance is a vehicle that I want to leverage and or use to do other things, whether that's park funds, generate income, whatever the reason, what we're saying is life insurance in general is a pretty secure asset. And what you're looking at is the risk return pyramid, meaning the base of this pyramid is basically saying these are probably the most secure vehicles you could basically place your funds in. We're talking savings accounts, treasury bonds, bills, US savings bonds, FDIC insured CDs, and in addition, life insurance based products. But as you move up this pyramid, the risk becomes greater. And based on the risk becoming greater, that also means your ability to, I'll call it, generate a return becomes greater as well. Meaning, the further you move up this pyramid, the better the opportunity for you to actually generate or make more money, right? So when you look at this section of vehicle, let's see, let me grab that. When you look at this section, what we're talking about here, are we talking about vehicles that are secure? And when you look at this section, and most of these are vehicles that are impacted by the stock market. So what we're talking about here is growth. And then when you get in this section, we're talking real estate, real estate, limited partnerships and such, buying businesses. What we're talking about here is leverage. So when we're talking about life insurance based products, what we're saying is, hey, it's a pretty secure vehicle that will allow me to put my money in a place and there's no fear of me losing it. But my challenge is this, because, I am a life insurance provider. I am a licensed life insurance agent, but I don't consider myself in this life insurance industry. I'm intentionally providing life insurance for a reason. And it has nothing to do with the life insurance. It has to do with the fact that life insurance is secure. But I'm more interested in adding these three pieces together, meaning I'm looking for a vehicle that is secure, that will grow with the market, but not be impacted by the negative performance of the market. And because I'm a real estate investor, I love other people's money. So is there an opportunity for me to be able to put all these three pieces together to be able to build and or generate wealth? So again, today is about life insurance. Why do you have it? Is it structured right? And which means, hey, you're all about security. So be careful when I'll call it, when that list of the reasons why start to include income, starts to include leverage, starts to include growth and your ability to be able to use while you're living. It's all about structure. Does your policy include these three actions? If yes, do you understand how they go together? So that's important. And what are those factors that matter? When we're talking about a properly structured cash value life insurance policy that we're going to use to be able to help us achieve our goal, what are the factors that make a difference? And I don't think this is rocket science. It all starts out with why. What's the goal? And then how much time are you wanting to allow your money to compound before or while you're using it? So that time horizon piece is pretty important. Am I 55 trying to get a policy that I want to leverage tomorrow to be able to do infinite banking? Am I 24, just started this new job? I've got a lot of time ahead of me. Maybe I don't have a lot to put in it, but this is I'll call it a long play. This is the objective is to be able to put myself in a position to where I could fire my job. So understanding what that time horizon is matters. And then the company. There are hundreds of life insurance companies, which means there are thousands of life insurance based products. That does not mean that all of them allow you to function in this space. Sorry about that, sweetheart. That doesn't mean that all of them allow you to function in the leverage, growth, and security space. I'm going back. So, again, I apologize.
All good. I got it.
So, the factors matter. The life insurance company matters. And the most important to me is this guy, the guy who structured it.
Or gal. Or
Guy
lady.
has like parentheses around it. So guy is saying group of people.
Yeah, and shout out to Sequoia in the chat who just got approved for her life insurance license.
Like, where's the congratulations confetti falling? Like, that's pretty dope.
That's it right there. All for you.
Well, maybe in the new space, we might have that behind us. That might be.
Oh, you know what?
Stuff, you know?
Adding it to the list. Okay, got it.
So yeah, the agent, the person that is designing this product for you matters. And how about this? The agent could know what they're doing. The agent could know exactly how to structure this the way it needs to be. But if they're working with a life insurance company, doesn't allow you to pull all of the necessary levers to be able to structure this properly, to be able to hit your goal, that's a problem. And I think what you're running into in this social media world is there's a lot of people talking about life insurance. There's a lot of people selling life insurance. But the question is, can those people, are they working with those companies that can structure this life insurance-based product correctly for you to be able to hit your goal? And then goes to structure. How you structure this policy matters. How you structure any policy matters. Not just, is it hitting your goal for today? What about the future? What is the impact on you leveraging your policy today? What is the impact on the cash value in the future when maybe you're not in a position to trade your time for money and you're wanting to be able to leverage this product to be able to use as income at a later date? But if you are pilfering it today and it's not structured properly, you may find yourself in the future not having the cash value available to you to be able to access. But how do you know that if you don't focus on making sure it's structured properly? Me and my straight lines. And then the last piece. And then the last piece, and this is something that I'm seeing. I get videos sent to me often. And usually there are videos around people who love whole life and don't like index universal life. And they are battling as to why you should pick one versus the other. And this comes up a lot. Investment versus savings. You'll hear terms like, I don't like using life insurance for investing. And you know what? The reason I love whole life is because it's a savings vehicle that provides you with guaranteed return, guaranteed growth, guaranteed dividends for you to be able to leverage and use and do other things. So it's this investment discussion versus savings. And to me, you almost have to ask those individuals, what do they mean by investment? And what do they mean by savings? Because some people tend to confuse the two. I'm about to say confuse the two. Go ahead, sweetheart.
Oh, I was just gonna
hanging out.
What'd you say?
Just hanging out.
Yeah, no, I was gonna say, I was gonna put it like a disclaimer in here that first of all, I think we all start from somewhere, and if you find yourself with something that we're talking about here, if you have already made a decision, what we don't want to do is make someone feel like they've already made a mistake that is unfixable, right?
Amen.
The other part is we don't know what we don't know. We didn't know what we didn't know when we first got started either. So starting is half the battle. Many people don't start, but I agree with the investment versus savings debate, I guess. I think that's where we get stuck. Our whole argument starts with do the math and do the long math. Don't stop with the surface math. And I think that's where a lot of people, it's a great argument to say, for instance, we've given lots of examples here on a higher interest rate for a HELOC versus a lower interest rate on a 30-year term mortgage, right?
Right.
And how we can save hundreds of thousands of dollars in interest, pay the house off, and reinvest that cash flow that we've reclaimed to make even more money in building this machine. But how many people would have stopped at that conversation simply because they saw a 7% or 8% or 11% HELOC interest rate and said, no, I'll keep my 3 or 4% mortgage? They would have missed out on hundreds of thousands of dollars. And then they're stepping over dollars to pick up pennies. And it's far too common in these conversations. But when you don't know, it's easy because it sounds so familiar for you to just agree with them. So I want to just disclaimer, we don't know what we don't know. And if you learn something new tonight, then that's your key to say, I want to learn more, right?
Well, and thank you for that, because I know I can get I can get pretty passionate around this stuff. And here's what I don't want to do. I'm not looking to alienate or isolate, because you're spot on. Maybe I am a life insurance guy who got into this business because it was an opportunity for me to make an income. And the products that I'm selling are the products that I learned to sell. Does that make me wrong? Am I out of here intentionally deceiving the people that I'm providing these products to? Absolutely not. And you're right. What I don't want it to seem as though there is only one way, because that's the part of the problem with this industry.
Right.
It's you don't know what you don't know. And so it's doing your due diligence around peeling back some of the layers to better understand why these products function the way that they do. And the biggest piece is you might have gone to someone thinking you were getting one thing, only to learn that it was something different. And it wasn't because you did something wrong. It wasn't because necessarily they did something wrong. You're right. You don't know what you don't know. When you start peeling back the layers around, why doesn't my product function this way? It was because it was never designed that way. And I never knew to design it that way, because the conversation we had was, this was the product you wanted. This was the ability you wanted. This is a goal you had. This is how you wanted to access it. And you can do those things. But some of those other details that makes a product function like this versus like that, we didn't discuss because neither one of us knew to have that discussion. Right. So I think you're spot on with that.
It's the many ways to 10 conversation,
Yes.
whether if it's 2 plus 5, right? And then you're filling in the missing variable, whatever it is that you came into the equation with. If the goal is to get to 10, then we have to first consider what it is that you have. How much time do you have? How much in resource do you have? It's what are your variables? So that's first and foremost. And we say that all the time. So if you've been here for a while, you've heard that probably a million times. But the part that is disheartening for me is when we're not looking for, how do I use my 1 and my 6 and my 3 to go find the missing pieces? It's not even a is 10 the limit? Can I get to 12? Can I get to 15? Can I get to 20 if I wanted to? It's sometimes there are people who believe this is the only way, and that their beliefs have become a part of their identity. So then it gets projected onto other people.
Right.
No, why would you want to get to 12 or 15? 10 is good enough for you, right? That's all I know how to do. And so therefore that's as far as I'm going to make sure that you go, because I can't get to 12 or I can't get to 15, right? So I think that everybody should get to 10, and that's good enough. Now I'm using this analogy because I think that's part of this conversation of the right person and the right company and the right that people would rather be right than be correct. Right? People would rather be right and have this be a part of their identity than to say, listen, we have some learning to do. We've got to find better solutions because we have a crisis in our economy. We have a crisis, a generational crisis that's starting to compound on its own. We have to find new solutions. So instead of talking about what won't work, right? Instead of trying to push the same old thing, we have to come up with new solutions. Modern problems require modern solutions, and we've got to be able to find them. Sometimes it means using some of the tools that we have available to us in non-conventional ways and being able to leverage them to yield a different result. And that's okay. We can watch DIY videos all the time using non-conventional tools, making non-conventional things, right? All of that makes sense. And we're like, wow, didn't even think you could do that with that. That's amazing. But when it comes to financial freedom, when it comes to financial stability, financial security, all of a sudden it's black and white.
Right.
Yeah. So that's where some of these assumptions come from, is just the same things being touted everywhere.
And Pinky reminded me of something related to old song from Black Sheep. You can get with this or you can get with that. And I think that's a part of the problem with this industry, because I think what we do well is we identify where the leverage is located, and it's actually this and that.
Yeah.
And if my job is to only sell you this, then I struggle with offering that, because that means I make less.
Or talking about it. Right.
Exactly.
Yeah.
Or that must be bad.
Right.
Versus actually, when you put all of these together, it's a pretty powerful subject or powerful vehicle, or it puts you in the best possible position to be able to generate income, because it's this and that.
Right.
Yeah.
Yeah.
So just again, we're not going to spend a whole lot of time on infinite banking, but I just wanted to highlight a few mistakes that I tend to see, especially people who share their illustrations with me, and they go, hey, you talk about this stuff on your channel, and I believe my product does the same thing. And hey, here's my illustration. Tell me yes or no. And I think it's making sure we don't lose sight of some of the assumptions associated with products like this. And that is, when you talk about infinite banking or becoming your own bank, what's your strategy? What's your plan? What's your goal? Like, why are we doing infinite banking? Is it because someone said you can become your own bank? And that sounds great, which means I can now fire Chase and fire Bank of America, and I can fund my own lifestyle. But let's go deeper than that. Like, how? Like, what needs to be contributed, and by when? What's that period of time, and how much? All of those things. So do you have a strategy and or a plan, or I'm becoming my own bank just because it sounds great? And timing, your time horizon. This says started too late. Here's a specific example around that. Let's say you're 50 years old and you want an infinite banking policy, and your objective is to be able to access your cash value as quickly as possible to be able to invest in what you want. And you're 50 years old and you're putting away $500 a month. Someone told you that when you contribute to your policy, you're able to access your cash value within the first 45 days. You've just put in $500. How much of that $500 do you think is going to be accessible within the first 45 days? The answer is zero. But for some people, they don't learn that until they get to that 45-day mark and say, hey, I just want to test the system. You told me I can access my cash value quickly. I want to see if I can. Only to learn you can't. Because what they should have been told was, if you're wanting to be able to access your cash value quickly, we need to make sure we fund it with enough upfront so that in 45 days, you can leverage your cash value to do what it is you want to do, which means it's not $500 a month. It's $500 a month plus some lump sum. And then after that 45-day period, there's a portion of that lump sum, whether it's 90, 70, 65, 45, whatever it is, that you're able to then leverage and go do whatever you want. So it's understanding where in this process you are based off your age. And are you starting this process too late, to the point where maybe the cash value or the liquidity isn't there for you to put into this policy for you to be able to access it as quickly as possible? Go ahead, sweetheart.
Yeah, this is like the infinite banking trap that a lot of people get into.
Right.
Nelson Nash wasn't the first to come up with infinite banking. He just he just took the information that someone else was already doing and put it in a book, which, by the way, is like, I don't know, 85% of books out there, right?
Trigger alert.
Anywho, the point is that this was not how it was being used. It was not should I buy a house? Should I invest in real estate? Or should I put my money in a whole life policy for infinite banking, or an infinite banking policy, which some people call it?
Right.
And then the next day, immediately, I'll take that same money out to go buy that house. It's insane to me how some people can have these conversations. And the truth is, unless you understand the policy structure, unless you understand how the policy grows or is penalized, or the money that would be kind of the snowball effect, I guess, whether if it's up or down the hill, right? Right, exactly. This is, to me, I think this is probably the saddest part, is when I hear people say, yeah, but I'm struggling because I want to access my money, be able to access my money immediately.
Right.
And this ain't that. Welcome to This Ain't That, because it's not. And go ahead.
Well, and I was just going to say, and it goes back to what? Where did I get the policy from? Who built it?
Yeah.
Right?
Yeah. And who benefits? Because if it's not focused on how you're benefiting, then, and this is the strategy part, not having a strategy. The majority of people that we've talked to, when they say, oh, I got this policy for infinite banking, why? What are you going to do? What is your infinite banking strategy? How do you plan to deploy that as a part of achieving your goal?
Right.
I don't know. Usually it's, I don't know. I don't know when I'm going to use it. I don't know how I'm going to use it. I don't know what I'm going to use it on, but they're paying a high premium for this policy, right? So that at some point, maybe they could figure out a strategy or a policy. What I hope everyone who tunes into our channel learns is, from the case studies that we cover, is how to put together your own strategy, how to become self-directed in the way that you can put a map, you can build a map. You can, from step 1 to, even if you can't see step 50 yet, you can at least get through to the first handful of milestones and knock out a ton of debt, grow and achieve enough wealth, income to achieve financial freedom, and feel really confident in the financial decisions that you're making, because you have framework,
right,
to be able, not just, you could use it for this, right? This isn't life insurance or any of these financial vehicles. They're not Cutco knives. It's not like you could cut a penny in half with this. When are we cutting pennies in half, right? Like, why do we care that you can do that? Okay, moving on.
No, you're good. All right. So, let's see, did I hit that one yet? Oh, so we talked about the infinite banking assumptions and or mistakes, but what about the mistakes associated with just insurance in general? And the biggest piece is here: not understanding the type of product you purchased and why you're purchasing the product that you currently have. Like, what is, again, at the root of all of this, it goes back to what is the goal. And it's really not being, I'll call it, not being okay with stopping at the first answer. Hey, I'm buying this life insurance because I want to make sure that if anything happens to me, my family's taken care of. Let's go beyond that. Let's go beyond how much you're contributing. What does that cash value look like? What are you going to use it for? What does income look like in the future? What do you currently have in place right now for retirement? Is there a gap? Is there an opportunity to use a vehicle like this to be able to bridge some of that gap? It's those kind of things. And you can start by asking yourself a few questions. Do you own your policy, or what did I say? Oh, yeah. Do you own your policy, or does your employer? Meaning, I run across a lot of people who go, Donnell, I like your channel, but I could really care less about life insurance. I've got enough. I've got 3 times my income with my employer. Well, what does that mean? Is that permanent or is that term? Does that 3 times your income stay with you if you leave that company? If you left the company tomorrow, does that life insurance follow you? And assuming that the answer to those questions are yes, it does, you might be in for a rude awakening. So it's kind of understanding, hey, not just the policy you have with your employer, do you own it? Is it yours? Or is it just there temporarily while you're with that employer, which means it's a term policy.
Yeah.
And
I'll throw this in there about the employers. 44% of millennials overestimate the cost of life insurance by 5 times, leading to underinsurance or no coverage at all. And when we say no coverage at all, sometimes it's because they thought they had coverage and then they ended up with like a ghost policy. In their mind, they have coverage, but then they don't actually have it when they've been fired, laid off, or switched jobs.
Right.
Yeah.
And does it grow cash value? Will it expire? And if it's growing cash value, how much? How much of your premium is going towards generating and or building cash value? Most of us never ask this question. And don't be shocked. But if you were to ask this question of the guy who created the policy for you, don't be shocked if they don't know. But how much does your cash value grow, and how much of your premium, your monthly premium, annual premium that you're putting towards your policy, how much of that is actually going towards cash value? Is the cost to borrow higher than the rate in which your policy is growing? This is for my infinite banking people. Most people who get an infinite banking policy are getting that policy because they were told, as the cash value builds, I'm able to leverage that cash value and go do things, go generate and create arbitrage, a spread. Well, the cost of borrowing, is it more or less than what's being made inside the policy? And we talk a lot about rates on this channel. Let's say it's more. I can make the argument where that doesn't mean anything, meaning it may cost me 6% to borrow my money and inside my policy is making 4. That's a -2 performance inside my policy. Not understanding that is the problem. It isn't the fact that it's there. It's not understanding the impact is the problem. Meaning, if I'm leveraging money inside my policy and it's growing at a -2% growth rate, and I'm doing an investment that's not making more to compensate for that, what's happening is I'm actually depleting the growth inside my policy as I do it. And I could be placing myself in a position to where my policy could become underfunded. And so it's understanding the impact of these things is the key. Go ahead, sweetheart.
Yeah, it says 20% of policyholders with whole life policies borrow against their cash value, but 15% of those are unable to pay it back, resulting in a reduced death benefit. One other thing to note here is when you start your policy, you have this idea of how much this money is, right? How much this money is worth or valued at that time, and then you're not considering inflation. So if you get this policy for your family, you're 40 years old, you're thinking to yourself, or even 30 years old, right? Doesn't matter. You're thinking to yourself, okay, if something were to happen to me, $500,000 is a lot of money for my family to have, right? And be compensated for, supplemented. That's going to last how X amount of time, this based on our lifestyle, right? Whatever that equation is. Okay. But then that you're not increasing your death benefit for them, right? Especially with a whole life policy. And so therefore, if you are borrowing and you're using life insurance for the living, right? That's a nice trending term right now. Life insurance is when you're alive. And if you're using it, but you don't understand how it impacts your policy, then not only has that $500,000 doesn't have the same value. Let's just say fast forward 20 years, right? You've been using it, you've not paid it back. You used it for whatever the case is, your daughter's wedding, whatever. Now you have even less money. So it's not only that amount is not only valued less, right? You were paying the premium for that amount, but now there's even less in there than that. So that is why it's really important to pay attention, because you think in the beginning, like big hearts, right? I'm going to have this legacy. I'm sleeping well at night knowing that everyone's going to be taken care of.
Right.
That's the part, is we all want to sleep well. We all deserve to sleep well, and we can. We just gotta take control. We gotta learn and take control, and we all have the ability to do it. That's it. The good news. Yeah.
Oh, and by the way, if I saw this correctly, I believe Rob just entered the chat.
Oh, nice. Hey, Rob.
Welcome back, Rob.
Yeah. Welcome back,
and then
Rob.
so this last piece, structured to supplement income. And again, there's a large debate around, can you receive income from your policy? And the key piece to that is it structured for you to be able to do so? Because the short answer to that question is yes. And the key word here to me is supplement. We're not talking about will this replace a pension plan? I think the short answer to that is there are possibilities that you can structure this thing correctly such that it can do some amazing things. It can outperform what a traditional retirement account might do. But this is about supplementing everything that you already have in place. And for most of my entrepreneurs, maybe you don't have anything in place. Is this a vehicle that you can use leverage to be able to produce that retirement or that income beyond your ability to be able to trade time for money? Is there an opportunity to structure this in a way that would sufficiently allow you to be able to do so? Again, short answer to that question is yes. But it goes back to structure, company, type. There's a lot of factors here that have to be addressed in order for that to be even remotely possible. And then a few other mistakes, skipping payments. There's a lot of people who start these policies and forget. And they believe, hey, I started the policy, it's going to be there forever, not realizing that missing payments can cause your policy to lapse. And once your policy lapses, you no longer have a policy. And so understanding why you're getting this product, what you're using it for, what's the goal, and maintaining the necessary steps to keep your policy in force at all times. Assigning the wrong beneficiary. This is big. I've got several clients who, when we're going down the path of starting a policy, the application process, and I ask, who would you like to be the beneficiary? Hey, I'd like for my newborn to be the beneficiary of my policy. Let's walk through what that means. Let's say I started a policy today and I made my newborn the beneficiary, and God forbid something happens to me tomorrow. Yes, the death benefit pays out to be able to take care of my newborn. The problem with that is my newborn, based off their age, is not capable of receiving. So what's going to happen to this death benefit that just paid out to my newborn? It's now going to go into probate. It's now going to be this, I'll call it, at the beck and call of the state to identify to identify when my lineage can receive their death benefit. That's a problem. So understanding who should be your beneficiary and what that looks like is very important, because maybe the better move would have been I started a trust and I built out the structure of that trust so that I could leave this to my newborn. And if something were to happen to me, it doesn't go into probate. It doesn't go into, some estate, what is it called? Survivorship. And it automatically goes to my trust. My trust is designed to distribute income to my beneficiaries properly.
Right.
And then, did you say something?
I said right. I was agreeing.
Oh, and only insuring the breadwinner. And just so we're clear, we talk a lot about how policies should be structured. And this is something that our own household is running into. So it's only insuring the breadwinner, meaning not taking full advantage of your insurable interests throughout the house, making sure your spouse has the necessary coverage, making sure your kids have the necessary coverage, focusing on the grandkids from a legacy play. It's making sure that you're taking full advantage of all of the insurable interests that you may have. So that why? Because this becomes a machine that can generate income for generations to come. And not adjusting your policy due to life changes. You got that policy when you were married to your first wife, and you've got all about it. And now you are no longer married to her and you're married to someone else. Did you make the proper adjustments to who your beneficiary is in that place? Bruh. And if you didn't, what's the impact?
Oh, I got the tea on this. There have been so many people who were either they had a girlfriend and that relationship didn't work out, and they had the same job and they ended up meeting somebody else and then getting married, and they didn't even think about it. But for some reason, they were in this long-term relationship with somebody else. They could have been married before. It doesn't matter. They were in a long-term relationship with somebody. They started the life insurance policy. Completely forgot about it. Just forgot about it. Been paying, especially the ones through the job, right? especially the ones through the job. Your job is not going to come and say, hey, excuse me, did you just get remarried? Because your life insurance still has your ex as the beneficiary, right? So this happens all the time. And you can't, your kids, your new spouse, they cannot go to court and fight this. They can't. They cannot. And I promise you, the pettiest payback is for that ex of yours to be sitting there with this heap of cash that should be going to your family. And who's going to say no? You got to be a really good person to give all of that back. Like, who's not hurting couldn't use an extra $200,000, $300,000, $500,000, right? Who's going to say like, oh, well, you know what? I had the opportunity to keep it legally, and who knows if you did them dirty? Like, oof, no. It's a no for me. Update your policy because this happens far too often.
That's it. And the last one being not fully understanding the financial impact of what it is you're doing. Meaning, again, why did I get this policy? And what is the full impact on my entire financial picture? Not just today, not just if something happens to me. What happens throughout my life, and how does this product fit into that? Is there an opportunity for this to be how I pay off my home? So I don't have to worry about paying off my mortgage because I actually have a vehicle that will do it for me. So now I can focus my attention on the other debts I'm eliminating, or putting my money in a position to where it can compound and go make other employees so that my money can make its own money. So I'm using it as a vehicle that will, it's my, I'll call it my safety net. And if something were to happen to me, it takes care of my larger assets while I can focus my attention on generating wealth elsewhere. Like, it's just understanding what is the full impact to your financial picture on this vehicle that you have now received from this agent that you barely know, or this life insurance company that may not structure it properly. So it's just making sure you fully understand those details. And some of the assumptions that we tend to run into as it relates to life insurance. Not right now. I'll get it later. Hey, I want to focus on paying off this debt first. So, once I'm done with that, then I'll start. Because I understand this product is powerful. I understand it can put me in a position to where I could fire my job if I do it right. I understand it can put me in a position to where I can leverage and do other things to generate and build wealth. But I'm not there yet. I need to wait. Or I don't have to pay back or repay any money that I leverage or borrow inside my policy. Not understanding when this is true and when it's not can be super impactful. Short example. You started your policy today and you dumped in a lump sum so you can access that cash value as quickly as possible. And you've decided never to pay back what you borrowed. What is happening internally in your policy as a result? Versus, hey, I've been contributing consecutively, lump sum upfront, and in about 10, 15 years, I start to leverage my policy. Well, based off how it's structured, based off how cash value grows, when I go to leverage it at a later date, I get to decide and choose whether or not I'm going to pay it back. And the impact is not or less impactful. And these kids don't need insurance. We're good. They're good. It doesn't, as long as I have insurance, as long as I'm covered, the rest of my family, they're fine. And again, it's missing that opportunity on that insurable interest piece and putting your family in a position to where they will never have to deal with some of the challenges that we've been dealing with. And I want to invest first, meaning I get it that this is an and asset. But there's some things that I want to take care of first. I need to get a couple more rental properties. I need to get a few fix and flips done and under my belt before I move on to focusing on legacy. Again, we can get ourselves in trouble with that. And then the last one.
Also, don't miss the note about your kids don't want your rentals, and these are just going to be liquidated, capital gains tax, lots of things to consider here if this is a part of your legacy, right? If this is like you're building the inheritance up. That's it. Because wouldn't you want to make sure that first the bulk of it would be tax free? It could be and if they're interested, and But the majority of people who are passing on real estate, it just gets liquidated, and it has to be liquidated fast, or then they're penalized if not. Yeah.
And that's the piece. This is designed or should be designed to be an and asset. So it should accompany everything that you're currently doing to be able to hit that financial picture. So it's making sure it's structured policy to do so. And again, this last piece is, hey, I'm spending $500 a year and I've got a $2 million policy. I'm fine. And again, understanding what that impact means, meaning, yes, you've got a fairly cheap policy with a very large death benefit. Awesome. Don't expect to be able to leverage any of the cash value, or don't expect there to be cash value being generated in that policy that you can use, because what you purchased was a term policy. What you purchased was a policy that all of the premium that you're putting into your policy is going towards the cost of that policy. Yes, it's a large death benefit, but it's not building any wealth for you or any leverage for you inside of that policy that you can use. So again, understanding what you have matters. Go ahead, sweetheart.
Well, one thing that we didn't put on here was about the cash value from a whole life policy and what happens in the event that you do pass
Structure
before you're
matters.
able to use it, right? So that's another assumption people have, is they go, yeah, I have all this cash value, which goes right back to the insurance company, and your beneficiaries get none of it.
And let me restate that. So there's this thing called the death benefit. And most people who know very little about life insurance believe the death benefit is just the life insurance. Meaning, if I pass, there's life insurance amount that pays out to my beneficiary. Not realizing the death benefit is actually two numbers. And life insurance companies and some life insurance agents prefer you don't realize the death benefit is actually two numbers. Here's what I mean. The life insurance is the life insurance the death benefit is the life insurance you're purchasing plus any cash value that's building inside that policy. And God forbid, if you pass away, the death benefit that gets paid out is that life insurance and its growth plus the cash value and any of its growth that wasn't used, which means it's $2 amount. And again, if it's structured properly, what's happening is that means there's a larger dollar amount that's being paid out to your beneficiaries than what was originally purchased. Why? Because the death benefit continues to increase as you're contributing to this policy. And how is it increasing? It's increasing because the life insurance you purchase plus that cash value that's increasing over time. So therefore, the death benefit continues to get larger.
Man, hold on. I'm going to pull up this. We like to talk about the 30-year mortgage as the buy two, get one. Buy two houses, get to live in one, get to keep one by the time you've paid for all of the interest, right?
Right.
And essentially what she's saying is whole life is the same. You're buying two policies, but two death benefits, but you're getting one.
And to defend that just a little bit, it's about structure. Not all are structured that way.
Right.
Meaning, yes, that it can absolutely be a situation where you bought this whole life policy and that whole life policy is building cash value and you have life insurance that you purchased. And if something happens to you, the life insurance company keeps the cash value and they pay out the life insurance. That absolutely can be structured that way, but it can be structured the other way as well.
Yeah,
Absolutely.
and I just want to bring this up because some people are saying, like, after I invest, after I have my lifestyle, then whatever's left over, whatever I can afford, right? Whatever I can afford after thought, that's what I'm going to add as coverage, right? We're going to talk about that too in just a moment, like the idea of coverage. What is it covering, and why do we shape it in this way in our minds, right? So it ends up being, well, I never got to it, or I couldn't afford it, right? Because it doesn't come up front, no different than electricity and gas and food. It's not something that should be last if it's part of financial stability, right? And creating that and maintaining that. But GoFundMe is so popular that everyone else ends up funding. We're funding everybody else's. So we should, this is where modern problems require modern solutions. The solution shouldn't be that we have to come out of our pocket for everyone else. The solutions should not be that. But it's unfortunate. And until it happens to you or your family, right, and you're stricken with the burden that gets laid on an entire family, when this happens, until it happens to you, you just assume that it's okay. Like, you're not here to pack your stuff. You're not here to deal with any of that, right? So what difference does it make? But when it happens to you, and now all of a sudden you have to add in all of that on top of everything that you're doing, it's a lot. Go find yourself.
Bruh.
Welcome back,
I
Pinky.
love that. Yeah, love that.
Oh my God. And to your point, let's get there. Life insurance.
I'll move you.
We got to move me out of the way.
Yeah.
Yep.
Oh, here.
So
There you go.
there's this confusion around life insurance being about protection versus the provision piece. And again, in most cases, we talk about protection versus provision. And in truth, it's none of that. It's and. Meaning the product you're purchasing, I guess you can't see that. The product you're purchasing isn't just for protection, it's also for provision. And it's making sure that it's structured properly to be able to do both. And what do I mean? It's if this happens, like what if this happens, then my family's taken care of. But in addition, as I'm contributing to it, I get to leverage it, use it, pay bills, eliminate debt, do reverse velocity banking, do infinite banking if I choose to. And if it's structured properly, it's building enough cash value over time to where it can supplement the income that will allow me to remain retired. Because I know my traditional retirement accounts is only going to produce 4% in most cases. And that isn't enough to sufficiently be able to sustain my lifestyle. So here's an opportunity to have an and asset along with everything else that I'm doing to be able to produce additional income as well. While, God forbid, if something happens to me, there's not this GoFundMe account that is required, and that last expense can be addressed. And in addition, I've got this trust in place to where if I do pass, that death benefit goes into the trust, which is designed to just distribute income for the rest of my legacy for the next 500 years. So the point is, it's not a this or that, it's a this and that. It's about protection, and it's about having the right provisions detailed in this product to be able to do what's necessary. So how do you make sure, or what are those steps you need to take to understand the how and the why? And this is where, moral of the story, it ends with making sure that if this is something that you're wanting to dig deeper into, meaning, hey, I've got a policy, it's a whole life policy, and it was supposed to be designed to do A, B, C, and D. Is it? Based off the illustration that you have, is this going to produce those things? Well, let's take a look at it. Let's jump on a call. Let's have that discussion. Maybe you are trying to identify where the miss is located, because maybe you have a policy that you like. It's just not properly designed to do what it is you're wanting to do. So maybe it's I'm going to maintain this policy here, and I'm going to now put my money, my additional funds in a position to where I can have a policy that is actually designed to produce income, if that's the goal. So it's identifying where the opportunities are. And in order to do so, the easiest thing to do is to share this information with me, and let's talk about it. Let's peel back some of those layers related to where the opportunities are inside the policies that you have, or some of the discussions that you've had. And to go a little step further, I have several clients who meet with me and they bring their life insurance agent with them. Because again, yes, I can provide life insurance-based products, but my goal is to help you generate income. I create IRAs. I create 401ks. I structure life insurance to be able to generate and supplement income that you can leverage and do other things. So bring your life insurance agent along. Have him join the call as well. And let's kind of talk through why your policy is structured the way that it is and what needs to happen for you to be able to hit your goal. I think I'm done, sweetheart.
Okay. Well, can you scroll up? Or is that me? If you, I'll try to put the banner up.
Oh, the self-directed ad info?
Yeah.
That's my fault.
Remember that part?
Yeah, that's my fault.
Okay. So if you want to book an appointment or go over your policy, why can't I see us now? Okay. There. Now you know how to get
Follow
there.
the red circle.
Yes. Self-directed.info. That's where you go. Bars. Okay.
My bad.
All right. Well, we've got time for some questions for sure. We've got a couple questions, so I want to get to those.
Okay.
But most importantly, I just want to reiterate that we have a whole life policy. We didn't know what we didn't know to make different choices. And so the journey that we went on wasn't we got to plan it all out. We got to learn all of the information first. There wasn't a channel like this, right? There wasn't any resources like this. That's be the change you wish to see, right? There wasn't any resources like this. There was bits and pieces that we picked up and we implemented along the way. So we started off with velocity banking, getting ourselves in a better financial position, right? Then we started adding more leverage. Then we started learning, whoa, we already have leverage that we could be using in a different way. Holy cow, what if we just did this? And then we're like, whoa, okay, now we heard about this other thing, right? I love how I said we because I was so difficult.
That's why I'm laughing.
Yeah. Dude, don't you guys love that? How I just did that?
She was so on board.
We learned. No, Donnell learned, and then we just fought about it a lot because it didn't make any sense to me. And I fought him on all of it because some of this stuff sounded crazy. Who's doing that? Nobody. So why would we? Why would we do that? And it took me a long time to wake up. Once I saw it, I'm like, we got to tell everybody. We got to show everybody this stuff so that they can level up, because I could never have imagined that we could have achieved the results that we did in such a short amount of time. And if this was possible for us the whole time, imagine what's possible for you. And why not? Why not? There's enough out here for everybody to win, We just don't know what we don't know. And so therefore, I want to just reiterate that if you already have something that's en route, right? You already have a policy, you already have a strategy, or you don't have one at all. That's okay. It's okay. If you feel like maybe, well, it's too late for me. Maybe it is. Maybe it's not. Maybe it's not at all. Maybe you are going to make it too late because you keep thinking that it's too late, right? And keep waiting to have these conversations. But a lot of time it's uncomfortable to have these conversations. One, you could be like me and you could be like, talking about this stuff is not a vibe. I don't want to talk to anybody else about my financial situation. Hate that. Just uncomfortable in general with the amount of stuff that I don't understand about this. That makes me uncomfortable to get on the call with somebody and start like, what do you mean by that? I don't get that term. Like I'm new. Explain to me like I'm 5. This is probably the perfect person to do that. And I think the reason why I was able to jump on board and we could get out here and start talking about it isn't because I feel like an expert about, I definitely don't feel like an expert, but I know the results are real. We're proof. We're proof that it works. We're proof that it doesn't have to only be this way, that you can pivot, you can change. If we could go back and do it different, will we do it different? Absolutely, right?
Yeah, absolutely.
Yeah. So however you're getting started, whatever your variables are that you're coming to the table with, that's enough. Like, what a relief, right? What a relief to know that you have, it's wherever you are is your starting place, and it's okay. As long as you start and as long as you take the time to take inventory and build your map. That's the important part. So is it too late for you to book a call? No.
Never.
Because even if you're not insurable, to leverage this as a tool, you may have insurable interests that you can leverage.
Let's game plan.
Yeah. I'm going to ask these questions. People have been waiting for these questions. Is there anything else you wanted to add real quick?
Well, the only thing I'll mention, because you mentioned the whole life policy, just real quick. when we got our whole life policy, um, I really didn't fully understand what I was getting, right? 'Cause so it kind of speaks to everything that we've talked about.
Yeah.
I knew what I wanted to be able to do. And I had, watched all the videos and spent the time to understand how you're able to do it. But did I fully understand the intricacies of our whole life policy? I didn't. Here's what I knew though, and no one can answer this, which is odd as of today, but no one could answer this. We had been doing infinite banking using our whole life policy. We had started out doing velocity banking, and I kept saying, there is a way to marry these two strategies.
Yeah.
And I had agents argue me up and down that that was impossible.
Right.
Again, velocity banking and infinite banking, there is a way to merge and marry these strategies. Only to find what? Most people who are offering velocity banking are offering what? Whole life policies to do infinite banking. Why? Because when you have the cash value and you free it up, you're looking for a vehicle to be able to put your money in and do other things, which means it's been there the whole time. The problem is the type of vehicle you use. This is where strategy matters. This is where the life insurance company matters. This is where the guy that's designed it matters. All of these things can talk, but it takes some effort and some work to be able to make sure they talk. And that's where you're right, sweetheart. Getting on a call and let's just understand where the opportunities are. Let's peel back some layers because we may be able to link some things together that may have been difficult to see because there's just these things in the way. Let's peel back some of the layers to understand where the opportunities are.
Well, like even some people call after they see first position HELOC live stream or video, and they're like, yes, no, I'm in. Oh, that's what I want. I'm going to go get one of those. And you kind of look through their profile, and after a discussion, you go, actually, that's not the best.
Right.
That's not what
You
I would
not
do.
Want a first position home equity line of credit.
Yeah,
Absolutely.
if I had all of those parts of the in my equation, I would actually not do that. And you get to show them something that you may not have been able to show anyone else before because it just wasn't an example, right? Like everybody's different and unique, their financial profile and the ingredients, right? It's a little bit like Iron Chef. Like you got to look in the basket and see what those ingredients are. Sometimes they're unique and you go, well, you can't, you got to make it this way if you were going to use those ingredients in order for it to come out right. So that's what I really love about everyone being able to contact you and just have the time. And that's what the time is for, you guys. The time is for you to just pour it all out and then say, okay, now let's get out the paper and let's build a map. And it's not in us or Donnell doing the map for you. It's teaching you how to write your own map, how to draw it all out, how to understand how to recalibrate your compass, essentially your financial compass, so that in a year from now, 2 years from now, 4 years from now, you are making confident, educated decisions and you are leading the way and you feel good about what it is you're doing, where you're going. You know exactly where you're going, right? If you don't know where you're going, any road will take you there. And that's where the majority of Americans are, right? Right now, they're learning that they were just headed towards retirement. They were headed towards one day I get to stop working and I'll be taken care of. And now they're headed towards it costs $8,000 a month for an assisted living facility. They don't have enough in their retirement accounts to cover even half of their expenses because it's just become expensive. So, and forget about adding medical needs on top of all of that. We have an opportunity to do it different. And that's where starting early matters, because imagine if you could go back and add 30 years, just 30, even just 20, if you could time machine, go back. Anybody got a spare one? We'd love to have it. Go back 20 years and start a policy then. And imagine how many compound cycles, extra compound cycles you would be able to leverage. Well, your kids, your grandkids, your nieces, your nephews, whoever it is that is near and dear to your heart or a part of your family profile, could be family, right? Friends are the family that we get to pick out for ourselves. And that's what it could be. And if, however you want to support in the community that you're building, family you're building, just imagine being able to go back 20 years. That's the power of time in this equation. especially because premiums are also, the cost of insurance is lower too. And so not only do you get to benefit that part, but you also get to get the money compounding for longer. So ready for the questions?
Just do it.
Okay. Roger, thank you so much for your patience. He said, infinite banking, does that have to do with a term or whole life policy you establish through your bank or credit union? That's a great question because not a lot of people really know what infinite banking is, right?
Yeah.
We just,
So,
we're assuming.
and rather than go into the history of infinite banking, I think the moral of the story is it's a properly designed cash value life insurance based product that you're able to contribute over time and then leverage and use that cash value to go invest and do other things outside of the policy. Whether that means, hey, instead of paying your car note from your checking account, I'm going to pay my car note from this leveraged dollar amount inside of this cash value life insurance product. And when I pay off that vehicle, the payment that I was paying to the vehicle, I'm going to pay it back to the policy. So what ends up happening is I get to recapture that interest that I was going to be paying to some bank. I get to recapture it in my own bank, which allows my cash value to grow faster. Now, what is the type of product? That's where we should just get on a call and have a discussion about it, because depending on who you talk to, they may say only infinite banking can only be done through a whole life based product. And my argument is that's not true. It's all about design, structure, and what your goals are. Because depending on the product, to me, should determine what vehicle you should use. And in most cases, what you will see for me is a properly structured. Let me not use the word properly structured. Let me give you the actual structure. We're talking a max funded option B IUL index universal life insurance policy with leverage. You design that properly, doing infinite banking through a product based off that criteria, pretty outstanding. Versus just a properly structured whole life policy to do the same. But the moral of the story is, how do you do it, or what is it, or where does it come from? Where do you get it from? It's a properly structured cash value life insurance policy that you would want to get through a mutual life insurance company. And short of that, jump on a call and I'll break it down for you. Words.
Okay, words.
A lot of words.
All right. He also has another question. When we talk about a properly structured policy, when we are talking about a whole life policy and not a term, because term life doesn't have a cash option, is my understanding correct?
So let me remove a word you use, because I get run into a lot of people who do this as well. Whole life implies permanent. So what he's saying is a permanent life insurance policy versus a term life insurance policy. Yes. Permanent can be a whole life policy, universal life, variable life, index universal life. So permanent policies, there's different policies under that structure. So are we talking permanent versus term? We're talking permanent. And from an infinite banking perspective, it can be done in a whole life or an index universal life insurance policy as well.
Okay. But also, some insurance is better than no insurance. So putting a pin in that, right. Don't forget that.
To your point
part
around term. Again, it goes back to why. Why am I getting this policy? Is it just for in case something happens to me, the what if? Then okay, term can fit that. But if the goal is to be able to leverage and use to do other things, or just build cash value in general, you cannot and will not be building cash value inside of a term policy.
Yeah, this is and Bab has a question about term insurance as well. Term on children, when they turn 21 years old, the company makes it a whole life policy, and the person that purchased the policy for the children at 5 and 7 now have no access to it. So this is a convertible, and the owner changes.
And here's the thing: not all term policies purchased on children has this effect. So who the policy comes from, how the policy is structured matters, because a convertible term can actually be a pretty powerful product, because it allows you to be able to convert that term into another vehicle that can generate and or build wealth for you. But the type of vehicle that it converts to, the type of life insurance company it's with, like all of these things matter. So that whole statement can be a very positive statement, But that whole statement can also be pretty dang negative and not allow you to be able to accomplish the goal that you were originally wanting to accomplish when you originally got the product. So again, I go back to the company, the agent, the structure, all of those things matter, and understanding how those pieces go together to help you accomplish your goal. Because it sounds like, hey, I'm getting a policy for an adolescent so that at age 21, it becomes a vehicle that's leverageable or accessible to be able to use. Well, if you didn't address that early, you get to 21 and realize I can't do any of those things that I was wanting to do. And again, that's the unfortunate part, which is where be happy to take a look at any policies you have to be able to have that discussion to understand what that structure looks like. And just to further this example a little bit, I have several clients who bought, I'll call it term policy. No, I'm sorry, cash value structured policies, whole life policies when their children were very small and they had been contributing till their children turned 20 plus years of age, only to learn that policy that they were funding, they had put more into the policy than what the death benefit was even worth on the policy, and was supposed to be building cash value, only to be building a fraction of that. Meaning, all to say, structure matters. Who designs matters. Where you get the policy from matters.
Okay, here's the tea on that. She had 4 daughters, so she was paying policy for 4 of her daughters,
For 20 plus years.
20 years, and no one was going to tell her that you had 4x'd this policy. You have paid way more than what the death payouts would be, and she should have absolutely could have put that money to good use, but it was just she was just overpaying essentially.
She was on autopilot. She was doing what a lot of us get roped into doing. It is, we put our blinders on, we do our job, we pay our bills, not realizing or understanding what that bill is we're paying or what it's doing. I just know I make the money, I have the job, and I'm paying the bill. I assume that everything will be taken care of because I'm doing my part.
Right.
I shouldn't have to babysit these guys. When I got this product, I was told it was going to do A, B, and C.
Right.
But you're not telling me now I got to go do their job? And the sad part around that is these people are selling you products.
Well, and if she stops paying, now she doesn't there's no payout at all. So she's paid in and gets nothing if she stops paying on these policies.
Right. It's sad.
If you want to know the whole story, the full story, all the tea, okay, there's a video. It's got a blue thumbnail and it's not very long, but it's like the life insurance industry is booming for who? What? That's what the thumbnail looks like. And so you can go find it right here in our channel. All of the information is in there because this is happening more and more.
It's common.
It's
common.
We're seeing a lot of this type of stuff, and we're just going to leave it there, okay? Because we said we were going to stay positive about this and I wasn't going to be triggered on these live stream streets. Okay, we have one more question. Oh, about the set it and forget it, though. A lot of people, to the credit of, you should be able to set it and forget it. You should be able to pay your bills every month and not have to worry if somebody else is doing something unethical or it's not making sense. The math isn't mathing anymore, right? Like you're not sending money into the electric company and they're like, oh, we lowered the rate years ago. You're paid up 10 years and nobody told you. Like that's never going to happen. Obviously, that's another live stream we could do about solar. Yeah. But the point is, we want to be able to put our best gifts forward, and we want to be able to trust people in our community so that you do your job and I'll do my job, right? You do what you're best at, I'll do what I'm best at. Bring your strengths and let's rock out. It's not always like that, though, and that's why we have to, the we don't know what we don't know, that's the part. And I don't think we should have to become experts, but I promise you, of everything that I know in my full story up into all of these years has been that I've learned we are our own best advocates. There is nobody who is going to fight harder than you for you. There's nobody that's coming to save you. There is nobody who is going to truly hold your best interest but you. And so that is why we have to learn. And sometimes we think like, well, I can't be a doctor. I can't learn all of this so that I can go advocate for myself. Yes, you can. And sometimes it's going to be required for somebody to step up and learn it so that we can start each one teach one. We can all level up together. But while we have the mentality of I can't, I won't, we can keep it simple. We can keep it easy. We can keep it uncomplicated. Doesn't mean that we don't have to get educated. So,
Well, and there's that, it reminds me of that visual that I share about the owls, right? Financial institutions, banks, life insurance companies, what do they have in common? They do not care about you. So
yeah.
what happens is we put all of this, I'll call it trust, into these agencies. If we would just step back and go, these are just businesses that sell products. That's all they are.
Yeah.
And they are subject matter experts, but I understand that they are just businesses selling products. So when they are giving me their best option and what they think I should do, that just means that now I need to go across the street and have a conversation with someone that looks just like them to see if I'm going to get a second opinion, because these are just people selling products. So I'm going to go find the best product. I'm going to have more discussion. It's not that I have to become the subject matter expert. It's that I'm going to understand that they are just wanting a dollar from me. And so that means I have to do my due diligence to make sure I'm getting the most for that dollar.
Yeah. Well, and you want to make an educated decision. That's really what it comes down to. Roger says, will I be denied if I have a health issue like diabetes? If not denied, I'm sure it will cost me an arm and a leg, right?
So, Roger, you haven't been on this channel a lot, I don't think. So, if you had, you'd hear this statement from me a lot. And I don't mean it to like skirt the question. It's just the truth.
Okay.
And that is, it depends. It depends on a lot of different factors. But let me give you a quick example. Let's say you and I are applying for the same product. You and I are the same age. You and I both have diabetes. Here's the difference between you and I. You are taking care of yourself. You are watching your weight. You're taking whatever that medication is. And there is documentation that shows you're doing everything you can do to keep your diabetes under control, and it is. Versus me. I've decided diabetes isn't going to beat me. Now, I'm not out here doing things excessively, but is there documentation that shows that I'm taking care of myself? There isn't. Yes, I am a type 2 diabetic, and I'm still kicking it. I'm not being excessive, and I'm not overweight, but there's not documentation that shows I am doing everything that I can to maintain this control. I am just living life as it comes. Between the two, who is going to be more likely to be approved? It's highly likely that you and I both will be approved. But there's a difference in how you're rated and how I'm rated. It is very possible that your rating will be much higher than mine. Well, what does that mean? If the ratings are higher, that means the cost of insurance would be very different between you and I. And it's also possible that I might be disqualified or not approved because I am a higher risk as it relates to getting life insurance. Last piece, I view life insurance as an and asset. So think about it. You're buying an asset. What is the asset of? Like, what is the criteria of this asset? It's your life. Your life, you are the asset. So if you were buying a different asset, if you were buying a property, a rental property, would you buy that rental property if it had holes in the roof? It had been flooded several times. The people before did not take any care of it. Versus that rental property that is in great condition. Which would you buy? Which would you more than likely provide the highest value for? We are no different. We are the asset, which means you in perfect condition, much higher rating, likely to get a much larger death benefit associated with it for the least amount versus me. If I haven't taken care of myself, that means my asset is more of a me as the asset is more of a risk. And so therefore the policy that I have might look a lot different. So just understand what is it we're buying. The life insurance company are leveraging us. We are the asset. And so we want to put our best foot forward to be able to accomplish a goal.
And on that note, I just want you to cover about having term. It's not or
Right.
term or permanent
Yep.
policies as well. You can have both of those as well and capitalize off of that.
It goes back to the goal. Like in our specific case, like how it works in our household. When I was 49, about to turn 50, here's what I know about life insurance. At certain stages of life, the max insurability changes, shifts. For me specifically, when I was 49, I knew that at age 50, my insurability, my max insurability was going to change because I'm now in my 50s. So as a result, um, I ended up getting a term policy alongside my properly structured cash value life insurance policy to do what? Well, because my max insurability is shifting from age 49 to 50, I wanted another vehicle at play so that when my insurable interest shifted, when my max insurability changed, I wanted no impact on my ability to grow my policy. So I got a convertible term to work alongside my properly structured cash value life insurance policy. So if anything happened, I could convert this term into my SKIA. I can convert this term into my index universal life insurance policy with leverage without having to be impacted by the change in my death benefit, by the change in my max insurability. What do I mean by all of that? My point is, term is a great vehicle because it allows you to get a lot of life insurance for a small amount of premium. And if you get the right type, structured in the right way, then you can use that to work alongside of the vehicle that you're trying to use for infinite banking or income or whatever those goals are. So you get a vehicle that can work simultaneously towards the ultimate objective. But you can't do that unless you're working with the guy that can structure it to be able to do so, the guy that can walk you through how these products work together, the life insurance company that allows you to structure things with the least amount of fee structure so that your premiums aren't being eaten up by premiums or cost of insurance or whatever those things might be. So it's making sure that all of these pieces kind of function and work together. And again, that's where jumping on a call, go to selfdirected.info right over there. Go to selfdirected.info and jump on a call and we can talk about it.
And that's really the best thing to do. Even if it's, I just don't know what to do. Sometimes these calls are, look, I'm trying to put all these pieces together, but I can't have these conversations with my spouse. They're just like not ready to have these conversations. So I need to have these conversations with someone.
Right.
Just like a sounding board, just to say, okay, here's what I'm thinking. Am I on the right track? And sometimes it's just that confirmation of like, you got it. That confirmation that gives you the confidence to keep going, right? The confidence to take that next step. There's most of the people that we talk to, they cannot have these conversations with their own family. They can't have the conversations with the people that they like, know, and trust the most. They just cannot. That's not a part of those relationships, or they just differ on opinions of what to do. And this is your future. No one else is tied to the outcome but you, right? No one else is going to be impacted by the decisions you make for your financial future. And that's why this is so important that we get this information into the hands of as many people as possible. So share it out. Share it with somebody. When we say each one teach one, that's exactly what we mean. You learn here and then make sure somebody else is learning as well if you can. Grab them and pull them in. About the illness, if you have chronic illness, if you feel like this isn't something that I could utilize because I may have a disqualifying factor. This is why there's not an all size fits one.
Right.
Wait.
All.
One size fits all. Yeah.
We know
all
what you're talking about.
Yeah.
All in one. Hands in the middle.
There it is. This is why it's not just one thing for everybody. And it has to be tailored to what it is that you have to work with. For instance, I have a chronic illness, and I was not expecting for it to hit me at the age that it did. I would never have imagined that, right? So there's a lot of people who are dealing with things that you just didn't plan for. So there, you have to learn to pivot. Well, we didn't know what the options were, right? We had no idea what those options were. Knowing that you have options is just freeing in the first place, right? Then there's how to leverage them and understanding how to pivot when you have a challenge or obstacle come into the mix, or an opportunity. It could be an opportunity to invest in something and you go, wow, now I know how to use this leverage. Like, how amazing is that? Shout out to us. We hit another milestone in our financial journey of a rental property. And that's the proof that if you understand where your leverage is and you come run across an opportunity, how many had passed us by for decades, right? We just did not understand that we were sitting on leverage, how to use it, and how to take action to multiply our efforts and our yield bigger results. Bab says, thank you for that explanation that helped me, but the information wasn't told to me when I purchased the policy.
Yeah, and I think along those lines, rather, um, in a lot of cases, you can make adjustments to the policy that you have. In some cases, it may look like this. I bought a policy that, God forbid, if I was to pass, my family would be taken care of. It may not be generating the growth that I wanted it to generate, but it is a life insurance policy that if something happens to me, my family's taken care of. Here's the good part. You're still here. Nothing happened to you. So therefore, now we just may need to restructure what we have so they can do what it needs to do, or we keep the policy we have, again, for the death benefit, and we start a policy focused on what our goals are. Because I think there's a question in it that asks, can I have more than one? Can I have a term policy and can I have a cash value life insurance product at the same time?
Yeah.
And the answer is yes, because it's about max insurability. Max insurability is saying this is the maximum amount of life insurance that I qualify for. That dollar amount is based on your age and your income. Simple example, if you're 40 years old, I think it's 30 times your income is your max insurability. So if you're 40 years old, you make $100,000 a year, the max amount of life insurance you can have is 30 times $100,000, which is $3 million. So you can have as many policies as you want, as long as the death benefit doesn't exceed $3 million. You're 50 years of age, it's 20 times your income. So if you make $100,000, 20 times 100,000, $2 million. So you can have as many policies as you want, as long as the death benefit doesn't exceed $2 million. So yes.
Yeah. This and that. Well, I really appreciated some of the misconceptions that we've cleared up today. I hope you've learned something from all of this. I think the biggest key here, I hope that you're holding at the end of this stream, is to be your own advocate. That means you're asking yourself the questions. That means learning further. That means we are not going to stop if we've made a mistake. We are not going to stop if we've reached an obstacle. If we've learned that we had a policy that isn't performing, we are not going to allow that to stop us, because that's allowing somebody else's influence in our process to impact our results. They're not impacted by or left with those consequences, right? They don't have to deal with any of that. We do. And we can do something about it. And we're about to give away the boat. And the reason why we give away the boat, so I'm segueing into why we give away these little boats, because we continue to ask ourselves the questions every day of what are we doing to help achieve our goal, right? Even like the little decisions that we make. Does it make the boat go faster? There is this question that was asked by an Olympic rowing team, and I'm about to share that story. If you've not seen it before, I don't think you can see it enough times. Every time I'm reminded about this story, about this question, and I like to keep it near so that I can ask myself, look, girl, is what you're about to do is about to help the boat go faster. And not everybody gets it, but we do. And I think it's because we started asking questions like this, and we're not perfect. We make mistakes, but because we continue to find our beacon, find the North Star, right? This is our North Star. How are we, the questions that we ask ourselves, the decisions that we make together, the decisions that we make alone, even starting with the thoughts, right? Even starting with the decisions that we're making about the things we allow ourselves to think. All of that is equally as important. And so we hope that what we can do is inspire you to a brighter, stronger future. And that is why we give away the boat. And so if you have not gotten a boat, put hashtag boat in the chat while we play this video for you so you can learn why we give away the boat. Here we go. In 1998, a British rowing team dreaming of the Olympic gold found themselves ranked 7th. Their focus had always been on the competition day, but they realized the keys to reaching their highest potential were hiding in the decisions that they'd make over those next 2 years.
Faced with two obvious choices, continue their current path and expect the same result, or give up, they discovered a third transformative option. They united under one guiding question: will it make the boat go faster? Every decision, every action was weighed against this mantra. If the answer was yes, they could, but would have to do it.
If the answer was no, it was forbidden, non-negotiable. Prior to the competition, this team was doubted and ridiculed, but no one knew what they had been doing. And once they hit the water, they were nearly unrecognizable, achieved their pinnacle, and won the gold. So we ask you,
what is your goal? What are you willing to do to achieve it?
Will your story feel unrecognizable, even to you? Are you willing to light your beacon and stay focused, stay committed? Is your story non-negotiable, or are you waiting to find out how you ranked? Your financial future is not a game. You are only competing with yourself and those in the boat with you, your family and the many generations to come.
Will this make the boat go faster? A sounding alarm, a beacon of clarity amidst turbulent life decisions.
It's not just about speed, but direction, purpose, and an unwavering commitment. Every choice, every sacrifice aimed at the goal.
The first agreement this team made was to become fully self-directed, making their health their wealth, adopting a new perspective on their time and freedom, and the decisions they could fully control to reach their goal.
Will we make your boat go faster? That is our pledge to you. Our mission is to arm you with knowledge, strategies, and insights to ensure that not only you reach the goal, but you do so long before your race is over. Okay. Oh, it's loading. So I hope it's gonna work this time. All right, here we go. I think we'll just spin a couple times because we haven't been here for a minute. Who's it gonna be? And you know, you could win more than one because if you're here, why not, right?
That's right.
New person to win. Hey, Corvette. By the way, I loved your announcement. Your claim it in the chat. That needs to be a ringtone. No one is coming to save me. I am my own best advocate. Okay, so what do you do? What do you do if you've won a boat? You go to selfdirected.info/live or /winner. You could go there too, put your information in, and that way we will know who to send it to. And if you've won a boat before, but you hadn't received your boat, or you forgot to fill out the form, it's for you too. Go get your boat. Let's see who else is gonna win. You know, we gotta stop getting sick and stuff because I love being out here with everybody. This is my favorite part. Hey, Kendrick! Congratulations! I love seeing people jump out. They haven't been in the chat this whole time.
Right.
Yeah, we get to see
jump
who's
in here and
watching
get
this
this boat.
Yeah, get in here and get this boat.
That's what's up.
Congratulations to everybody who has won today. And if that inspired you, the boat video, thank you, Legacy Wealth Enterprise. We have that up on our channel. Just the whole video. Share it with somebody. Inspire them. Hope that's not too loud. We really appreciate you all tuning in. We've missed you guys, and we are counting down the days till we will be in our new space, and I cannot wait for you guys to see it completely done. I'm like, how many more sleeps until we're in there?
Fortnite.
Yeah, how many more sleeps until we get to be in our new studio space? So that will be really exciting, and hopefully that will create a better learning experience too for everybody. We can do some more things like webinars and class type environments like on Zoom, where other people can be more interactive maybe. I don't know. What do you guys want to do? You can put in the chat, in the comments, and we'll start talking about it. Anything, any last words?
Nope, I think we're good. Let's get outta
Okay,
here.
well, we know that time is the most valuable asset that we have, and we thank you so much for spending your time here with us. We like to end with, if you didn't come from a wealthy family,
You can make sure a wealthy family comes from you.
so stay tuned,
Stay protected.
stay focused.
Stay connected.
I'm Angelique,
And I'm Donnell.
and our goal is to help you.
Get self-directed.
And to do that, we have a ton of free resources. So don't sleep on those, and make sure to come back every Sunday, right now anyway. Sundays, 6 p.m. Pacific Standard Time. And we'll see you then. Thanks so much for tuning in, guys. Have a great week. Hey, before you go, we want to remind you that becoming fully self-directed means gaining complete control over your wealth, time, and freedom. It's not just an idea. It's a framework, a mindset, and the power to make informed decisions to secure your future. Being here means you're taking those steps, and we want to thank you for allowing us to guide you. We believe that we grow farther and faster when we grow together. So tune in next time and tell a friend to tell a friend. We've helped thousands of people just like you start their journey to financial freedom. And if they can do it, you can too. And if you're ready to learn more, we got you. Get a head start by grabbing these 2 free books. But how do they get them, Donnell?
Head over to my website where you'll have access to a few things. A ton of free resources, case studies, and over 100 5-star reviews from people just like you. And in 15 minutes, we can explore what's possible for you. So don't wait.
Invest in what you want, when you want.
But first, let us help you
Get self-directed.